Good morning, everyone. Thank you for attending this final briefing. As you know, tomorrow our firm will represent Watson Personal Care Store Holding Limited before the High Court. Before we appear in court, I want to ensure that every member of this team fully understand the facts, the legal issue, the ethical consideration, and our professional responsibilities. Remember, our role as tax law is not simply to defend our client. Our responsibility is to provide advice that is legally correct, ethical, sound, and supported by evidence. Today's meeting will test your understanding before we meet the client. Is everyone ready?
Yes, Miss.
Let's begin with the fact of the case. Mr. Zikri, please brief the team what happened in this case.
Certainly. This case began with Watson entered into financing arrangement with its related company, Watson Labuan, to finance the acquisition of shares. The company paid interest rate at LIBOR plus 3% of prepared transfer pricing documentation with the assistance of PwC Malaysia. Following a transfer pricing audit, IRBM concluded that the financing arrangement was not conducted at arm's length and issued additional tax assessment for year of assessment 2010, 2011 and 2012.
Why did IRBM believe that the transaction was not at arm's length?
IRBM argued that the loan agreement did not contain a fixable repayment schedule because repayment was only required open demand. IRBM believed that an independent lender would normally require clear repayment terms. As a result, IRBM adjusted Watson's taxable income tax under Section 140A of Income Tax 1967.
Now, I'd like everyone to think beyond the facts. Imagine you are advising Watson immediately after they receive the additional tax assessment. One manager says, let's defend our position immediately. Even if our documentation his witnesses, perhaps IRBM will notice. What would that be the correct approach?
Miss, that approach would be unethical because taxpayers have the right to minimize tax through lawful tax planning. Defending a tax position that is not supported by sufficient evidence would violate professional ethics. As legal advisors, we must recommend full compliance with the law rather than encouraging unsupported claims.
Can you explain why?
Because in the short term, the company might reduce its tax liability, but if IRBM later discover insufficient documentation or unsupported transfer pricing position, the company may face additional tax assessment, penalty, repeated tax audits, legal costs, and significant reputation damage. So, professional integrity requires us to advise clients honestly, even when the advice may increase their tax liability.
That is exactly what distinguishes ethical tax planning from tax avoidance that cannot be legally justified. Remember, our responsibilities is to ensure every tax position comply with the income tax and can be supported with reliable evidence. Okay, now let's examine what the legal issue in the greater detail.
Yes, Miss. The main issue is whether IRBM was correct in making a transfer pricing adjustment under Section 140A of ITA 1967. IRBM argued that Watson financing arrangement with its related company was not conducted at arm's length and therefore adjusted the company's taxable income.
What is the arm's length principle?
Arm's length principle is required transaction between related parties to be conducted under the same condition that would apply between independent parties. This ensures that related companies do not manipulate prices of financing arrangement to reduce their taxable income unfairly.
Okay, now imagine you are represent IRBM. How would you justify the adjustment?
IRBM would argue that the loan agreement only required repayment upon demand and did not contain a fixed repayment schedule. Independent lenders normally include clear repayment terms to manage credit risk. Therefore, IRBM believed that financing arrangement was not commercially comparable to an independent transaction.
Okay, now let's change the perspective. Suppose you represent Watson. How would you defend the company?
Watson will argue that repayment flexibility alone does not prove that a transaction is not an arm's length. Commercial financing arrangement vary according to business needs. Most importantly, Watson prepared transfer pricing documentation with professional assistance and applied a benchmarking to to support the interest rate of LIBOR plus 3%. Therefore, any transfer pricing adjustment should be supported by proper economic analysis rather than assumption.
Okay, what the witnesses exist in RRBM position?
IRBM did not conduct a functional asset and risk, which is for analysis. They also did not prepare a counter benchmarking study or provide sufficient comparable transactions to demonstrate what Watson financing arrangement differed from the market practice. As tax professional, we should always base our conclusion on objective evidence rather than assumption.
Okay, this is an important professional principle. Whether we advise taxpayer or represent the government, our opinion must always be supported by evidence, never be assumption. Okay, now let's move beyond the legal issue. Every tax case also involves ethics. Ms. Daniela, what is the ethical dilemma in this case?
The ethical dilemma is balancing the company desire to minimize tax with its responsibility to comply honestly with Malaysian tax law. Reducing tax legally is acceptable. However, defending a tax position without sufficient evidence and deliberately ignoring transfer pricing requirement would be unethical. Because the tax professional have a duty to act with integrity, honesty and accountability. Their responsibility is not only to protect clients' interests but also to uphold public confidence in the tax system.
Okay, now who are the stakeholders affected by this dispute?
There are five main stakeholders. First, Watson, because the company may have to pay additional tax and penalties. Second, IRBM, because it is responsible for ensuring taxpayers comply with Malaysian tax law. Third, the government, because tax revenue finance national development. Fourth, honest taxpayer who expect every company to pay its fair share of tax. Finally, society, because tax revenue support healthcare, education, infrastructure, and other essential public service.
Okay, now who's gain if companies manipulate transfer pricing?
The company may gain through lower tax payment in the short term.
And who lose?
The government loses the tax revenue. Honest taxpayer may bear a greater tax burden. Society may also suffer because fewer public funds are available for essential services. In addition, public trust in the tax system may decline if taxpayers believe companies are not treated fairly.
Excellent. That is why fairness is more important in taxation. Tax law is not only about collecting revenue, it's also about maintaining equality, accountability, and public confidence. Okay. Excellent discussion, everyone. Now, before tomorrow hearing, there is one final question, which is how did the High Court decide the case? Ms. Akila, can you explain?
Yes, Miss. The High Court ruled in favor of Watson. The court held that although Section 148 allow IRBM to make transfer pricing adjustment, those adjustments must be supported by sufficient evidence and proper economic analysis. The court found that IRBM did not provide adequate evidence to prove that the financing arrangement was not conducted at arm's length. Therefore, the additional transfer pricing adjustment could not be sustained.
Does that mean taxpayer will always win against RRBM?
No, miss. The court's decision does not mean the taxpayer can ignore the transfer pricing rules. Instead, it reminds both taxpayer and RRBM that tax adjustment must be based on facts, evidence, and the law, rather than assumption.
Exactly. As a future tax professional, we should never advise clients to exploit the law or conceal information simply to reduce the tax liability. Now, I have one final question for all of you. What professional advice would you give companies to avoid dispute like this in the future?
First, companies should maintain complete and contemporaneous transfer pricing documentation for all related party transactions. Proper documentation provides evidence that transactions comply with the arm's length principle.
Second, companies should conduct regular internal tax review and seek advice from qualified tax professionals before entering complex related party transactions. Professional advice reduces the risk of non-compliance and costly disputes.
As a recommendation, suppose a company deliberately manipulate transfer pricing, hide relevant information, or ignore its obligation under the Income Tax Act, what the consequence might it face?
The company may initially enjoy lower tax payment, However, the long-term consequences are much more serious. It may face additional tax assessment, penalties and fines, repeated tax audits, repayment of underpaid tax, significant legal costs, reputational damage, loss of investor and public confidence, and, in serious cases, involve deliberate tax evasion prosecution under Malaysian tax law. Therefore, the short-term financial benefit is far outweighed by the long-term risk.
Excellent. That's will reflect the value expected of everyone tax professional. Always remember, our responsibility is not to help customer avoid tax unlawfully, but to ensure compliance with the law while acting with honesty, integrity, accountability, and fairness. When taxpayers and tax authorities both fulfill their responsibilities ethically, public confidence in Malaysia's tax system is strength. Thank you, everyone. I believe we are now fully prepared for tomorrow's hearing.
Thank you, Miss.
Thank you, Miss.